Welcome back to Morning Trade Live. It's time now for the big picture. So let's welcome in Collin Martin, Head of Fixed Income Research and Strategy, Schwab Centre for Financial Research. Very good morning to you, Collin. Thanks so much for joining me. Okay, so we've got the rate-cutting bets, at least, rising in the market for December at about 70% as far as the probability is concerned now. So we've come off around 30%, which we were looking at last week. Couple of data prints and maybe some commentary, particularly from Williams, to thank for that. So what are you seeing?
Well, we're still seeing a lot of dispersion amongst the committee members. And, you know, what we saw on Friday with the kind of repricing following New York Fed President Williams' comments is that clearly the markets weigh certain comments more than others. And I think that's an important point to make. The New York Fed president is the vice chair of the Federal Open Market Committee. That the president is a permanent voter. So you know, Williams' view holds a little bit more weight compared to maybe some of the district bank presidents who might be voting this year, meaning they only have one more vote coming up before the end of the year and then they rotate out, or maybe someone coming in, but again, will only vote for you know, 8 meetings next year. So clearly the markets are weighing on that. We got more, you know, kind of dovish comments this morning from Governor Waller suggesting that he would vote for a rate cut. So we're kind of counting to see where people are right now. What's clear is that there's not a consensus, and that's an important point to make. It is a vote, and maybe we'll see a lot of dissents, but the majority rules. And it sounds like right now there is a pretty large number who would support a cut, but we still have a few more weeks. I'm not sure how much the data is going to play a role in that, though, because the data, it's very lagged right now, so everything's a little bit nuanced. And I feel like most committee members, absent something, you know, really surprising with the data that we do get, they're probably firm in their views. So it's going to be an interesting few weeks. We still think that the Fed won't cut, but as we get closer and hear more comments from Fed officials, I'm sure we'll see, you know, that implied probability, you know, either rise to suggest that yes, they will cut, or maybe move down again, because we know the committee doesn't really like to surprise the markets.
No, they certainly don't. But as you say, we are looking at a very divided Fed. We know that. We've seen that in the FOMC minutes. We've heard that as far as some of the commentary coming out from these various officials. So as far as the data is concerned, I mean, you're still of the thinking that they sit on their hands come December, and the thinking out there, at least, you know, it's not the consensus, but it certainly is gaining traction that perhaps prices still are a little bit too high now, probably not a little bit uncomfortable with maybe going for another cut come December because of that. But what is the next data print that you're going to be paying attention to the most, as far as, you know, not what could be the sort of make or break, but I mean, what could feed in to the calculus, or even act as a potential for a constraint to that sort of rate cutting bias that we're seeing priced into the market right now?
Well, it's certainly a challenge right now because we're in that data void right now. We know we're not getting October readings for the labor market and for CPI, so we're kind of just missing that data in a very important time right now. You know, we're at sort of a turning point, especially when you look at the labor market. So we do think the labor market is what most officials are going to be focusing on. Yes, to your point, inflation's high, and that's one of the key reasons why we think the Fed doesn't necessarily need to do anything. Inflation's been above target for over 4 years now, and it's kind of been holding steady. It's not necessarily showing signs that it's going to resume its downward trend. So I think that's, you know, that's super important. But on the other side, you know, if the labor market does begin to weaken, even though it's going to be somewhat delayed, that's probably what most people will focus on. If we look at the risks, what's more of a risk right now? Inflation re-accelerating, you know, above sustainably 3%. We don't think that's necessarily the case right now. Maybe it hangs around 3%, but we don't see a case for a re-acceleration. But there does seem to be more risk with the labor market. And, you know, you can tell a lot of officials are a little bit concerned about a slowdown there. So it's going to take a little time before we get, I think, a clear picture. But we're going to be looking more at the labor market because it just seems unlikely that inflation is going to re-accelerate from here.
Okay, and as Powell and Co keep saying, I mean, they've hammered home the fact that there is no risk-free path here, which perhaps speaks to your point as well, Collin. Thank you so much for joining me here. We'll have to wrap it up there. Collin Martin, Head of Fixed Income Research and Strategy, Schwab Centre for Financial Research.